Welcome to the channel once again. I'm Chad Anderson. Thanks for being here to talk about escrow accounts today. I mean, these things always confuse a lot of people, and to be honest, they're quite boring. But it's good that you should understand it, and it's good to have a grasp around it. I get this question quite a bit when it comes to closings, and people say, "Hey, I notice I'm paying an entire year of homeowners insurance here at closing." That's correct. You have to have the property insured and you've got to get it insured for a year from the date you close. Why are you also collecting escrow months to start an escrow account for my homeowner's insurance when I'm already paying it for an entire year? Common question. Here's the very easy answer. So let's bring this up to the stage and run through this with you and take a look at it. So let's pretend that we have a closing date February 28th. Sorry for that almost looks like a European way of doing the date, but let's say February 28th, 2024 is how we're going to do this. Okay, that's the closing date. Your homeowner's insurance premium is $1,800 for the entire year. That's the number we're going to go off of. The additional HOI, that's just an acronym for homeowner's insurance. The additional HOI, we're going to collect 4 months, which is $600 extra dollars. So if you think about it, at closing, you or the seller, someone is paying for you to have insurance of $1,800 for the first year, and then also paying for $600 to set up the insurance portion of your escrow account. Now, HOI is covering your home. So think about it this way. Insurance is now covering your home from February 28th of 2024 until February 27th of 2025. It's covering you for 1 year, 300 and in this case 66 days, because the 29th of February, this being a leap year, but 365 days. So the question that I always pose back is, well, where's the money going to come from in February of 2025? So the mortgage payment does include escrow. Now, there are situations where you can opt to not escrow and pay taxes and insurance yourself. That's up to you. That's if you can. That's if the program allows it. That's a different discussion and debate. This time, we're assuming that you are escrowing. So mortgage payment would include escrow. Your first payment in this scenario would be April the 1st of 2024. So you close almost the last day of February. Your first payment is the first day of April, just about 4.5 weeks later. So think about it this way. April to January, there are 10 payments, right? Do it on your hand. April, May, June, July, August, September, October, November, December, January. 10 payments that are made from your first payment to the month prior to when the insurance is due. The insurance is due February of 2025. Lenders always want a 2-month cushion for escrows. Okay. Lenders always want to have that 2-month pad for the escrow account. Now, if a payment is made in February of 2025 for that bill that's coming due, because it is coming due, it's due on the 28th of 2025. So if a payment is being made in that month, well, you need to have 12 months worth in your escrow account for the premium. And you also need 2 months for a pad. So you need 14 months total. So when the bill comes due, when it's time to send that check out, you need 14 months in that escrow account, 12 to make the payment, 2 in order to keep the pad where it should be. So that's why 4 months are collected in this scenario. Sometimes, and you'll see, like some people or some lenders will collect 3, some will collect 4. I'm going worst case scenario here in collecting 4, but sometimes you could see 3 as well. But in this case, that's why 4 months would be collected at closing, so that 10 more months for your escrow are added through your monthly mortgage payment. And then by the time that bill comes due again, you have enough in the escrow account to pay the bill, and you have a pad for at the same time for the next year, and it's going to keep going in that cycle. I also did a video on this channel about escrow shortages. You should go back and watch that as well, because that can confuse people at the end or beginning of a calendar year, depending on what's in your escrow account, what's coming due. Did the bill change? Did the payment go up? Well, if it did, it's likely your escrow account that changed, not your mortgage payment of principal and interest. And that's why they also keep a pad in there, is so that the mortgage companies, in case those bills go up, they have a little bit of extra room or cushion in order to make those payments without having to send you an immediate bill to make up the difference. So I hope that helps. I hope that works. Again, this is one that comes up more often than you would think, where people don't realize, hey, I'm paying a full year already. Why am I also setting up 4 months for an escrow account and paying into escrow? And that's the exact reason, is because when the bills comes due next year, it's your escrow account that we initially set up, plus all those payments you make throughout the year, that will give us enough money to make that payment when the bill is due the following year, 12 months from the closing date. So, hope that helps. Drop a comment, DM. If you can, please like, subscribe, follow, hit the bell on this channel. Appreciate everyone who has reached out and has been a part of this and engaged. It's actually been pretty cool. I had no idea if this channel would do well or not. It's doing pretty well. And again, that's thanks to you guys with the encouragement and reaching out, asking questions, and allowing me to talk to some of you personally and, hear your story, or at least just chat and figure out how we might be able to help you or put you on the best path forward. So thanks again for watching. Stay tuned for more content dropping, and appreciate all of you. And we'll talk to you again on the next video. Take care.